Instacart prices its IPO at $30 a share. That's at the top end of the range, raising $660 million in the process. It gives the business a valuation of $9.9 billion. That is a far cry from the $39 billion it commanded back in 2021. It's the second big public debut for the NASDAQ in a week after ARM's listing, but many analysts suggest this one is a better barometer of the health of the overall market.
And the strike against the big three automakers entering its fifth day with a deal still elusive. Now the UAW warning over more action if, quote, serious progress is not made. Union reps is saying that they have received no new offers from GM, Ford, or Stellantis since they laid out their proposals on September 14th. Now, Stellantis says that it has resumed negotiations, citing, quote, constructive discussions. On Friday, 9% of the union's nearly 150,000 members down tools.
And the Fed begins its two-day meeting with the rising price of crude oil emerging as a major headache for the central bank. The global benchmark Brent topping $95 a barrel for the first time since November as the Saudi-Russia plan to curb supplies comes into full effect. The impact on the consumer is being felt. Gas prices hit new 2023 highs Monday as the squeeze on supply translates into higher prices for the refined product.
All right, well, let's focus in on the backdrop today because we've got a couple of big stories out here for you. Instacart's IPO, that's happening right here at the NASDAQ market site. Then we also have the standstill, that is the UAW strike, and the ever-climbing price of oil. Lots to dig in here, Brad. But first, what's sticking out to me is the UAW strike and some of the developments that we heard overnight about the fact that neither side, when it comes to the big three versus the UAW, is backing down. The UAW is now saying that they could potentially expand this strike if they don't see any progress made before Friday. Now, what's standing out to me is what analysts are saying about this potential here in expanding the strike, that they could target some of those more profitable vehicles in terms of the plants that they're targeting, ones that manufacture the F-150, the Chevy Silverado, and the Ram. And that could have a real impact here on these businesses, obviously, but also for investors.
Yeah, and I mean, it's right to point this out, especially with the new kind of fisticuffs or at least Twitter fingers or at least word battle that they're continuing to move forward with here. And we've actually got some commentary on that into our newsroom. Our own executive editor, Brian Sazi, passing along some of the notes from Ford in what they're pushing back on here, and particularly here, some of the points that the UAW is calling out. Ford's saying that, hey, that's not entirely true here. And so as we're kind of coming back to the negotiations, let's keep in mind that our CEO is not earning as much as they say, or perhaps are overvaluing the earnings for the CEO of Ford to be. The profits that they're looking at, the UAW's demands would wipe out billions of dollars of profitability essential to investing in the future. Ford saying that. And on the auto worker wages, on average, Ford UAW workers are today among some of the best paid manufacturing workers in America. That all being said by Ford. So as these negotiations continue on at the same time, while this strike has already been implemented and going into effect, it's a larger question of how far apart the two sides still really are, and if they can actually come a little bit closer, especially on some of the demands that the UAW has put forward here. But we're also going to be watching Instacart today. That is today's morning driver. And today's morning driver, Instacart, big day in the world of IPOs. Everybody knows this. The grocery delivery service is going to make its public debut on the NASDAQ today. On Monday, Instacart priced its shares at $30 each for its initial public offering. That's at the top end of the range that was expected. Instacart previously planning for a range of $26 to $28 a share here. The IPO expecting to raise a total of $660 million, valuing the company at around $10 billion, rough math there. And Instacart certainly has some big shoes to fill after ARM's successful IPO. Okay, so all that said, now you kind of have the table set for what could be a better barometer, as many are looking at Instacart versus ARM. And of course, ARM, for the massive IPO that it was, the largest since we had seen Rivian back in 2021. Instacart perhaps a better child or poster child of, for the other IPOs that are ready to make their way into the public markets, how they could fare, how they could do, especially in gaining some of that early traction and demand, and then still continuing to grow out the business from there. Yeah,
certainly. Instacart, I almost said Instagram there. Instacart, backed by some of the most well-known VC venture capitalists there in the business. So clearly there's a lot riding on this public debut. You talk about why this is attractive. And I think initially when a lot of people think of Instacart, they think of online grocery delivery. They think of that last mile part of the business. But So much of the importance and really the value here in this business is the access that they have to data.
Right.
And their ad-driven business. So the fact that they have the ads, the fact that they have the software, about a third of their business there speaks to the fact as to why maybe we are seeing higher margins when it comes to Instacart's business relative to some of the competitors out there, and it's profitable.
Yeah.
Now, the margins, still something to be a bit wary about, but the fact that it is profitable, that is why it's getting so much attention from the street, and also so much is riding on this, like you said, just about what this could be indicative of when it comes to the broader IPO market and maybe some of the activity that we could see following this debut.
$2.2 billion in gross profit, just to put a number on that for our folks out there that are waiting for this company. Of course, later on, once the book is fully built and once we see it get the go-ahead to go public here, that is going to be the ticker that everybody's going to be keeping an eye on, CART, CART. And
I love that ticker.
That's a good one. We were having a little debate before the show, who has a good ticker, who has bad ticker. We'll save that perhaps for an overflow segment one day. But when you think about the number of U.S. grocery orders that they fulfilled on, 263 million orders fulfilled, and then additionally, the percentage of the grocery market. And here's what's going to be interesting, because going forward from here, as you continue to watch the digital side of the U.S. grocery market continue to be fulfilled, 85% of that right now is Instacart. And so at the end of the day, that's going to be extremely important to see how they continue to service into different markets as well.
Yeah, and it's also going to be critical just in terms of what we're hearing from Instacart with these upcoming quarters here coming up after their public debut, because we know inflationary pressures have been a huge challenge here to the industry, how much they're able to pass along to consumers. So really what this tells us about the overall grocery business and so many maybe potentially of its competitors out there is something investors are going to be keeping an eye on here for months to come.